there, and thank you for tuning in to another edition of the Austin Report on the one and only Rents Radio Network. My name is Gabe Elton, and I'm the sales manager here at Austin Rare Coins and Bullion, and you are listening to me live this 21st day of January 2015. You can visit our website at www.austincoins.com. From there, you can go to our Learning Center. We have a live prices page. You can also find out more information about our app for your smartphone. And you can request information there, see our latest reports, give us a call. There's a ton of information there. We've got a lot of information to cover tonight on tonight's show. But first, I wanted to cover some of the issues that we've seen transpire since my last show, which was back on January 7th. One of the first things I want to point out is that gold and silver, if you haven't noticed, have been surging since the beginning of this year. Gold is up 8%. Silver is up 14%. I'll dare say one of the best performing asset classes for 2015, if not the best. We'll figure that out here in a few days at the end of January. But this is huge news, and I don't know if you've noticed it or not, but this rise in gold and silver has been taking place while other commodities have been getting slammed. And those other commodities that I'm referring to are oil and copper, which are huge indicators. In fact, they call copper Dr. Copper because it kind of signifies the health of the global economy. And whenever you see copper begin to crash, that's a strong sign that we have major trouble ahead, and I'll dare say deflationary trouble. And that's one word that you don't hear often from a gold dealer or someone who sells coins, because deflation is normally negative for gold. That's what we've always been taught to think, is that when you have a downward pressure on prices like stocks, bonds, real estate, oil, and copper, that normally occurs during a time when currencies are going up in value. However, in the face of all of these deflationary events, gold and silver have been going up. And I'm going to cover why that is, or why we think that is. But I think it's a big positive indication. Kind of hard to understand, but if you get your arms around it, I think it's awakening. It's sort of an awakening to what's to come. So another issue that I wanted to cover tonight is a recent decision by the Swiss bank. Many of you have probably heard about this. The Swiss bank decided to decouple from the euro, and what that implies and how that decision caught many investors off guard. Hedge funds, currency traders, it sent shockwaves through the financial community. And what exactly does that mean, and what exactly is that forecasting? We'll also talk about a major announcement expected tomorrow from the ECB, the European Central Bank, who have clearly decided to double down on something that hasn't worked, and that's quantitative easing. And no one knows for sure the true scope of this program, but a lot of news leaked today that was a little disappointing to the markets. And who knows, that might have been a head fake. It seems to me that they leaked that information on purpose to only come out with more quantitative easing than what was suggested, in which case markets should respond accordingly. So we'll watch that. Obviously, the money printing has begun. And you know, I wrote down a few notes as far as, you know, what I wanted to focus on tonight, and also what we might title the show as. And I didn't know if it should be the final countdown. I didn't know if it should be "and so it begins," or just simply the deflation edition, because that's what we're seeing, and central bankers are extremely afraid of inflation, or deflation, I should say. In fact, they would love to have some inflation. And unfortunately, their policies aren't working, and the crash seems to be right around the corner. So I wanted to talk about that announcement, but also why it's all happening. I mean, it all seems to be coming to a head here. Things are quickening. A client called me the other day and said, explain to me in 2 sentences where you think all of this is headed. And I said, things are getting worse, and they're getting worse quicker. Because that's exactly what's happening. Things are happening in a week what used to take a year. And these major announcements, I believe, are tremors to the earthquake that is coming in the financial industry. I think there will be currency wars, a potential global currency reset. I think a crash in confidence is coming. What's ahead of us is likely going to make 2008 look like a cakewalk. And speaking on deflation, every indicator out there is screaming deflation. The dollar has been surging, but gold has been surging with it. What does that mean? And that's something we're going to get to tonight. Oil is crashing, but gold is not. What does that indicate? Copper is crashing, but gold is not. Total announced job cuts, which is another very deflationary indicator when a job announcement or job cuts are announced. Total job cuts for North America in 2015 just topped 32,000. And these are 32,000 good paying jobs. I'll bring you to an article by Michael Snyder, who many of you who listen to me know he's one of my favorite writers on the economy. And he had an article out just today, 12 signs that the economy is really starting to bleed oil patch jobs. And this particularly hits home because this has happened to a member of my family. And he goes on to say, since 2003, drilling and extraction jobs in the United States have doubled. These jobs typically pay very well. It's not uncommon for oil patch workers to make well over $100,000 a year. And these are precisely the types of jobs that we cannot afford to be losing. The middle class is already struggling as it is. And he goes on to quote a Bloomberg article. The first thing that oil field, and they're telling the story of this fellow named Emmanuel Osekwe, and he arrived at work and noticed that all the offices were dark. And normally this actual business was bustling with workers. In fact, I think it's the same place where my cousin worked. And he says a couple of hours later, after a call from Human Resources, he was told that he was one of the thousands of energy industry workers that would be getting their pink slips as crude prices have plunged to less than $50 a barrel. And he's not the only one. Last week, Schlumberger laid off 9,000 workers. Baker Hughes laid off 7,000 workers. Suncor Energy plans to lay off 1,000 workers. Halliburton gave pink slips to 1,000 workers last month. Diamondback Energy just cut their capital expenditure budget 40% to $450 million. It goes on, but like Snyder says, these are good paying jobs, and the Federal Reserve Bank of Dallas projected that 140,000 jobs related to the energy industry will be lost in the state of Texas alone this year. What does that point to? What is the fact that the Swiss National Bank decided to decouple from the euro? What does that point to? What does it mean that tomorrow everyone is expecting the European Central Bank to announce another round of quantitative easing? And what is Germany going to do in response to that? Germany is basically the powerhouse of the European Union. And they're very much against bailing out other countries who failed to be responsible. And they are the driver of the European Union. What if they decide to leave the European Union? What does that do? And some of those things, as I mentioned, we're going to be getting into tonight. But one thing that I wanted to cover right off the bat is a common theme among the alternative media crowd. I hear it all the time. I see it being promoted by some people, and actually I would even call them the alternative media cloud. People like Harry Dent, others that say that there is a big crash coming in the price of gold and silver. And the reason why they say that is because they point to deflation. Because forever, or I shouldn't say forever, since the 70s, people thought deflation caused gold to fall. Because it's only likely that because the dollar is rising and because gold is valued in dollars, that gold should go down. And many people were predicting a $900 gold price or, $12 silver price, or some people have even said a $9 price per ounce on silver. And a lot of people think that they're smarter than the system, so to speak, and are waiting for this collapse to come because they have anticipated it. And on that, I can agree that a collapse is coming. But they assume that when it does, the price of gold and silver will fall accordingly. And that when that happens, they're going to go all in and buy up all the gold and buy up all the silver at these low prices, because then it's going to the moon. And even, prestigious forecasters say this. I mean, people who say that gold is going to $5,000 an ounce and that silver is going to $100 an ounce say to wait, because you'll be able to buy gold at $900 and potentially silver at $9. And I'm going to explain to you why that doesn't work. Because if you look at all the indicators out there, deflation is soaring. Not inflation, deflation. The only things that are inflating are the things that you and I need to live on at the grocery store and everything else. But the way that the government compiles the data, it's actually deflation is occurring. You look at the price of lumber, deflation is occurring. You look at the price of oil, deflation is occurring. You look at the price of copper, deflation is occurring. You look at the dollar, it is surging, but so are gold and silver. And people are scratching their head and wondering why. And I want to remind you, and many of my listeners that have been here for a long time can attest to this, as I've been saying this forever, and it's not even my idea. It was brought to me by a fund manager client of ours and a friend, a guy that manages huge amounts of money. He's always said, and I've relayed it to you, our listeners, that in 2007, gold was an ancient relic. I'll say that again. In 2007, gold was an ancient relic. If you managed a fund, you didn't own gold. And if you did, you were thought as a crazy Looney Tune. And then 2008 happened. And it became cool to own gold as part of an institution or as part of a hedge fund or as part of a pension plan. And they rode that wave in gold all the way through 2011, whenever they began to get out of it. But the one thing that I've always said is that when they see the warning signs, they know where the exits are. And gold is sort of seen as a mainstream financial asset these days, more and more so every single day. And that's the reason why you have gold going up in the face of deflation, because guess what? The Swiss franc is no longer gold. They have negative interest rates. And we'll cover that here in a second as well. But people are now looking to gold as financial insurance. It's a financial instrument. Are you going to buy treasury bonds that pay negative? Are you going to go into a 10-year bond for a U.S. Treasury that pays 1.7%? When admitted inflation is higher than that, you're actually paying the bank to hold your money. These are sophisticated investors. They understand this. You, and I've said this many times, you and me and even our company does not move markets. The people who move markets are scratching their heads and saying, none of this makes sense. Why would I ever pay a government to hold my money? How is that a safe haven? Especially when central bankers have totally lost their mind. And very well-connected people are realizing this today. What are they going to do with that money? And, you look back historically, and I had a chance to have a conversation with some of these very connected individuals, and I wrote down a few notes. And some of the things that are being discussed is, gold is a tiny part of financial markets as a whole, and that is a dislocation from history. Right now, there's about $300 trillion worth of assets, and I use that term assets very loosely because most of it's paper, but it's $300 trillion underlied by only $6 trillion worth of gold. What that means is if you took all the gold ever mined that still exists today, people surmise it's about $6 trillion worth. But the global economy is over $300 trillion. What if only a small percentage of that found its way into gold? And what would be the result of the prices? And that's the reason why you see gold and silver going up in the face of deflation all over the place. And right in the face of it, the dollar surging, gold is continuing to go up. That means these institutions that are scratching their head have made decisions to no longer buy these bonds that pay them negative rates. And so what do? Are you going to buy real estate that's at all-time highs? Are you going to buy stocks that are totally dependent on quantitative easing? Or are you going to say, hey, why don't we have 2% exposure to gold? But guess what? If 2% of that $300 trillion went into gold, it would consume the mining supply for 75 years. And that, my friends, is the reason why gold and silver are defying reality in the face of this deflationary collapse, and that when it happens, those people waiting for $900 gold and $9 silver are going to be left holding an empty bag, because these institutions know where the exit signs are, and as things get worse, they are going to head into gold more so than bonds. And as I mentioned, it only takes a few percentage points. If they just wanted 2% exposure to gold, and there's not enough physical out there. So for those of you that are waiting, I think you're going to be upset. And another thing is, if your synopsis is right, and if gold and silver were to fall, one thing that we've witnessed recently is the premiums are rising while the prices are falling. The reason why is because the price is a false indicator controlled by futures. The price of silver plummeted last year, but the Silver Eagles had their biggest year ever. There was a record production of Silver Eagles last year. And that means we had more trouble supplying those Silver Eagles at those lower prices, even though the mint was producing at an all-time high, and therefore premiums were rising. So, like I said, there's a double whammy waiting for you there. But getting back to this, these notes regarding institutions and how they might affect the gold price, keep in mind that in 1933, gold represented 30% of all financial assets. In 1971, that was down to 10%. So right now, if gold were to represent 10% of global assets, that's $30 trillion, but there's only $6 trillion worth of gold on the planet. So that's the whole summation, that when this happens and as these institutions start to move into gold and silver, there's not enough of it there, and we are starting to see signs that has happened. Gold as a percentage of global asset is the smallest that it's ever been in the history of the world. And it's decoupled from other commodities. It's going up with the dollar. The Swiss has ended this euro peg, and keep in mind, when they adopted the peg, gold was $1,900 an ounce. And that's one of the things that we'll cover on the back side of this, is what happened with that Swiss move. What does it mean? What is Germany going to do tomorrow when the European Union announces once again they're going to do another round of quantitative easing? The signs are there. I believe that the green flag has been waved for gold and silver and that the race is on and that you should get your positions on as soon as possible. You can visit our website, as I said at the beginning of the show, www.austincoins.com. You can also reach me directly at 1-800-928-6468 with any questions whatsoever. So that's the question is, what's going on? What does it mean? The world seems to be on fire, and we're going to get into that in the next two segments. Hopefully we can find some answers for you here tonight. See you on the backside.
Many people have experienced the benefits of drinking all-natural Life Change tea. The unique blend of 8 herbs helps detoxify your body so you can live a healthier life. Numerous testimonies have been given about the benefits of drinking Life Change tea. So, are you drinking Life Change tea? Interested? Log on to getthetea.com. That's getthetea.com. Many are so impressed with our product, they order a year's supply. And why not? When they do, they receive 2 months free. That's a $70 savings. The body is meant to heal itself. Sometimes the body just needs a little help. Get the tea at getthetea.com. That's getthetea.com. Or call us at 928-308-0408. That's 928-308-0408. This is not an ordinary green tea and is not available in stores. This tea helps with digestive problems, acid reflux, high blood pressure, high cholesterol, and as talk show host Jerry Doyle says, it'll make you as regular as a baby bird. Enjoy your life. Get Life Change tea at getthetea.com.
This is Richard Ostro, owner for Carnivora Research International. In 1985, former President Ronald Reagan requested that Carnivora be sent directly to the White House from Europe, where it was manufactured at the time, effectively making him the first American to use Carnivora. He used it successfully for a serious immune challenge, which we are prohibited from mentioning in the United States. I would like to add that he used Carnivora approximately 8 years prior to the onset of his Alzheimer's condition, for those of you inadvertently connecting the two events. Visit us at carnivora.com, now used in 27 countries around the world. Carnivora instinctively seeks out abnormal cells only that don't belong in the body without harming a single normal cell. 100% pure, natural, and harmless to humans and animals. Call 1-866-VENUS-FLY. That's 1-866-VENUS-FLY or visit carnivora.com. Your immune system will thank you.
Oxygen. It's nature's oldest therapy and plays an essential role in destroying viruses, bacteria, mold, yeast, and fungus, and keeping the human body healthy and strong. Now, you can give your body and your immune system a mega boost of disease-fighting oxygen with all-natural Oxy-C. With so many people now leading a sedentary indoor lifestyle, most are in a chronic state of oxygen deprivation, which sets up a perfect environment for disease, general fatigue, and a host of other symptoms. Oxy-C is yours in simple, convenient capsules. Nothing to mix, nothing to hassle with. Take it with juice or water anytime. Feel a cold or flu approaching? Have no energy or spark anymore? Try all-natural Oxy-C and prepare to be amazed. Oxy-C is only available from New Earth Health Solutions at Rense.com. Look for the New Earth banner at Rense.com.
All right, Gabe Elton here on Austin Report, sitting in for Charlie McGrath on the one and only Rinse Radio Network. I know Charlie doesn't like for me to bring him up. He likes for me to take this on as my show, but I do like to give him my appreciation for the hard work that he does and those also at the Rinse Radio Network. So getting back to this move by the Swiss National Bank and what it means and its repercussions. So, as you guys know, it caught a lot of people off guard. A lot of traders lost a lot of money. A lot of funds lost a lot of money. People were not expecting this at all. And as I mentioned, it's sort of like the tremors have started for the earthquake that is to come. And those tremors began in earnest whenever the Swiss National Bank announced that they were going to decouple from the euro. And a little bit of history is important to put this in context. In 2011, well, first of all, the Swiss franc has always been thought of almost as good as gold. They have a very conservative financial regime in Switzerland. They own a lot of the world's gold and hold it in Switzerland, and it was seen as a safe haven. As a result, back in 2011, when the euro was falling apart, people were piling into Swiss francs, causing their currency to surge, and that, of course, makes their exports more expensive. Well, as a result, the Swiss needed to put a stop to this, and also as sort of a saving grace for the euro, which was about to fall apart back in 2011, as it is now about to fall apart again here in 2015. However, the Swiss came in as a saving grace and linked their currency to the euro. As a result, Swiss banks had to accumulate euros, because their currency was pegged to euros. And this is where it gets dicey. A lot of people suspect that they were buying euros and shorting gold. And that would help quiet down the situation over there. Well, if you think back, what was happening to the gold price in 2011? Well, it was going through the roof. Gold hit 1900 back in 2011. Well, that's when the peg was instated. Gold was $1,900. Well, they just recently, without anyone knowing, announced that they were going to decouple or depeg from the euro. So now people are surmising that because those Swiss banks no longer need to hold as many euros, that they are now using those euros to buy gold in anticipation of what's going to be announced tomorrow by Mario Draghi over at the European Central Bank, which is another huge round of quantitative easing. Many people say they're going to take out the bazooka, although some of the news that leaked today doesn't indicate that, and I'm about to cover that as well. But you look at this decision, and it basically is the Swiss government saying, look, if you guys are going to drown, if you're in a sinking ship, we're not going to drown with you. And I believe that was the green flag to gold and silver, and that was an acknowledgement of what's to come and what's going to be announced tomorrow. And basically the Swiss, they're giving not a vote of confidence, but a vote of unconfident. And they're saying, look, you guys are nuts. And guess what fund managers saying, fund managers are saying about central banks? Look, you guys are nuts. I mean, I hate to use this term, but if you've ever seen Tropic Thunder, the central banks are going full retard. And there's no telling what's going to become of this. As Peter Schiff has said in the past, they're like a high school kid with a chemistry set just throwing chemicals together, hoping something's going to work. But sooner or later, they're going to blow us all up. And now it's not Peter Schiff that's talking about that. It's not Gabe Elton. It's major people with highly connected and that are saying that's what other people in their circles are saying. And what are you going to do? I mean, are you going to have 2% exposure to gold if you're a fund manager? In the face of what seems to be coming down the pipe. And so the Swiss move is a telegraph of what is to come, and I think it is a green light for gold and silver buyers. If you don't have your positions yet, you need to give us a call. You can visit our website again at www.austincoins.com. You can reach us directly at 800-928-6468. So let's go on and talk about this European Union announcement that everyone's expecting tomorrow. But first, I want to cover something that Mark Faber, a billionaire investor, recently stated during an interview. He said, "I'm positive that gold will go up substantially in 2015. He goes on to say, 30%. My belief is that the big surprise this year is that investor confidence in central banks collapses. And when that happens, I can't short central banks, although I'd really like to. And the only way to short them is to go long gold, silver, and platinum. That's the only way, and that's something that I will do." And I'm here to tell you, if you want to short the government, buy gold and silver, because these central banks have gone off the rocker. And if you look at the way that it's working, it's like a game of musical chairs. The United States will do a $1 trillion worth of quantitative easing. And then Japan will announce $1 trillion worth of quantitative easing. And now the European Union is going to announce another round of quantitative easing. And so these currencies, all major currencies that basically dominate the currency trading markets out there, the yen, the euro, and the dollar, are all going down the toilet in concert. So those of us who are using these currencies, we barely notice what is happening because they're all falling together. But the ECB, they had a quantitative easing program they're going to announce tomorrow. It was leaked. Oh, believe it or not, it was leaked today. And it looks like they are proposing $50 billion in bond monetization per month. $50 billion. Which is a huge amount of money, and they're monetizing their debt. They are buying their own bonds and printing the money, just like we did here in the U.S., and now the Federal Reserve is loaded up with bonds that they can't sell to anyone, because if they had a buyer for them, they would have never had to buy them themselves. And that's what I believe this My RA program from Obama is all about, is commandeering a portion of IRAs that are part of a guaranteed retirement account that are going to be forced to buy these bonds from the Federal Reserve. But that's a whole nother story. I just wanted to paraphrase that because that is what the European Union has decided to do. The only problem is that the market was expecting $1 trillion per year. However, their announcement is right around $600 billion, which is a little bit of a disappointment, and why I think that so-called leak that came out today may have been done on purpose just to see the reaction of the market so that they can come out tomorrow with an even bigger plan than what was expected, and therefore the markets will be happy. Just some of the headlines that are on Google right now regarding this. One from Bloomberg: Draghi is pushing boundaries of Euro region with QE program. Reuters says ECB to decide on bond buying plan for reviving Eurozone economy. Yeah, right. Wall Street Journal: Europe's QE salvation. Los Angeles Times: European Central Bank expected to unveil stimulus plan. And however, the Wall Street Journal got it right. Bloomberg got it right. The Wall Street Journal came out with an article today by David Malpass that we'll cover on the backside of this break, and I'll fill you in on those details. Thanks for sticking with me. I'll see you on the back end.
Hi, this is Jeff Rentz, and I've been using ozone for purification and health and wellness for a long time. And I'm here to tell you I have never come across a more dynamic, better built, affordable home and office ozone unit than the brand new Trioxy Re-Ion. It is simply the most versatile ozone unit yet, and as the name applies, the Re-Ion also produces a stream of health-enriching negative ions whenever you wish. truly the best of both worlds. The Trioxy Re-Ion has easy digital controls, allowing you to determine how long you want your Re-Ion to produce ozone and or negative ions. In short, this ingenious little masterpiece allows you to purify the air you breathe or ozonate your drinking water anytime you want. Create your own indoor bioclimate. No more bacteria, viruses, mold, yeast, or fungus. The Trioxy Re-Ion keeps the air inside your home cleaner than the great outdoors. Visit GoHealthyNext.com right now and get the full story. That's GoHealthyNext.com.
Charlie McGrath of WideAwakeNews.com here with a question for my friends at Austin Rare Coins and Bullion. What do they know that we don't? Insiders and a who's who list of elite have made it crystal clear that we are headed for catastrophe, putting out warning after warning, urging people to batten down the hatches. Billionaire George Soros has recently been dumping stocks and at the same time acquiring millions in gold. In fact, in a recent interview, he was quoted as saying, "I'm not here to cheer you up. The situation is as serious and difficult as I've experienced in my career." Out of control government deficit spending and a Federal Reserve that's only solution seems to be print more fiat currency will lead to a weaker dollar and massive inflation on necessity items such as energy and food. If you have wealth to protect, please visit my friends at Austin Rare Coins and Bullion. Gabe Elton and the folks at Austin Rare Coins and Bullion have many Wide Awake News customers because they're honest, they're fair, and they won't sell you paper promises or product they do not have. Call Gabe Elton at 800-552-4109. That number again, 800-552-4109, or visit them online at austincoins.com.
Make a promise, take a vow. Trust your feelings, it's easy now. Understand the voice within and feel a change already beginning.
All right, Gabe Elton here with the Austin Report on the one and only Rinse Radio Network. Great show tonight. We've covered a lot of information. I've got actually a little more information to cover, but it all goes back to the tremors that I think are leading to an earthquake. And I think it's no longer deniable. It's right in our face. There's deflationary events occurring all around us. All of that points to a collapse in the financial markets and generally also points to a falling gold and silver price, but the opposite is happening. And I have to give it to the Wall Street Journal for carrying this article entitled "The World's Monetary Dead End." And the subtitle is "European Central Bankers Embrace Quantitative Easing Despite the Sorry Track Record of Helicopter Money." And he goes on to say that the central banks in U.S., Japan, and Europe are trapped in a loop. They are fully invested in the theory that zero rates and bond buying are stimulative and add to inflation, yet growth, inflation, and median incomes keep going down. On Thursday, the European Central Bank is likely to announce a bond buying binge that could reach $50 billion a month. Yet many bond yields in Europe are already negative. Buying low-yielding bonds is a dead end for growth. The Bank of Japan has already bought bonds worth more than 50% of its gross domestic product with no impact. And ECB bond buying will be a major new political negative if it gives European governments a further excuse to avoid economic reforms. Central bankers should be forcefully urging their governments to pursue practical growth-oriented solutions that encourage private investment and hiring. Instead, they've allowed the focus to be on them and their decisions to prolong quantitative easing, even though quantitative easing hasn't worked. Central bank liabilities have grown by an extraordinary $7 trillion since the 2008 crisis, yet many parts of the world are in or near recession, including Japan, Latin America, Eastern Europe, and most of the Eurozone. The World Bank and International Monetary Fund have just lowered their 2015 global growth forecast, and the IMF is expected to knock more than $5 trillion off its October estimate of 2015 world GDP due to recent declines in commodities and currencies. And he goes on to say they apparently believe deflation can still be halted by what Milton Friedman called a helicopter drop of money. But it isn't clear that they have the right tools. And that's the only tools they have. They can cut rates or print money. Well, rates are already negative. They can't cut them anymore. Here in the U.S., they're near zero. They can't cut rates again. The only thing they can do is print money and destroy currencies. And as a result, very sophisticated investors are starting to lose confidence in central banks altogether. Like central banks are now upside down. You used to look at Citigroup or Morgan Stanley. Now it's the entire central bank who, if you look at their assets and liabilities, they are technically bankrupt. And another great article from Bloomberg, gold rally due as central banks add risk. And the subheader is exactly what I'm telling you. This is spreading and it's becoming mainstream. The subheadline is perfect. Incompetence and monetary dysfunction make gold look attractive. And this is probably the common theme of tonight's show is right in the face of deflation. Everyone expects gold to fall and it's going up. How can that be? And he explains it in this article entitled Gold Rally Due as Central Banks Add Risk. And I'm not going to cover most of the article, but the last of the article here, it says, for their part, investors have been warned. So many leveraged positions in the markets are predicated on predictable central bank behavior and believable central bank assurances about their future actions. A curious feature of market behavior since the financial crisis is precisely the way investors have put so much faith in central bankers, and that politicians have not stirred up more on the issue of central bank independence. The episode also underlines the increased intensity of deflationary pressure in Europe. A minus 0.75% deposit rate makes cash look attractive. It also makes a case for gold, he says. While the yellow metal is often thought of as a hedge against inflation, it is more of a hedge against central bank incompetence and monetary dysfunction, which includes deflation. There is no opportunity cost in holding gold when interest rates are below zero. And sure enough, the price of the precious metal has recently been creeping up. With further deflationary pressure and more competitive devaluation, negative interest rates will spread across a growing number of countries where inflationary prospects are minimal. The growing band of investors who confront these dismal negative rates have good reason to ensure that gold makes a comeback. And this guy gets it. Those last 3 paragraphs of that article surmises everything that we've covered tonight. In the face of all of these deflationary events, gold is surging. What does it mean? It means that people are losing confidence in central banks. Not just people, but institutions, hedge funds, mutual funds. When they decide, as I mentioned, as they scratch their head and they look at their portfolio, and they have 80% in stocks, 10% in bonds, and 10% in real estate, and they're scratching their head and they're saying, what in the hell am I going to do? Is it crazy to say they might decide to put 2% of their assets into gold? And that when that happens, that will totally obliterate the supply of physical gold and silver, and that as people continue to lose faith in these central bankers, and remember that's the only thing that backs up of our currency, there's going to have to be a global currency reset. I've talked about that many times on this show, how the IMF wants to have their own form of world currency. The World Bank wants their own form of world currency. The BRICS Bank wants their own form of currency. And guess what? None of them are even talking about including the dollar. Well, when you lose confidence in central banks, the only other currency that remains is gold. And people are beginning to realize that once again. And remember, in 1933, gold represented about 30% of the world's financial assets. Now it's less than 0.5%. If gold were to represent 10% of financial assets as it did in 1971, that would be 5 times more gold than exists on the planet and that's ever been mined in the history of the world. So the stage has been set. The flags have been waved. this is the final countdown. And I would recommend that all of you prepare your house, prepare your dinner table, and give us a call. You can reach us directly at 1-800-928-6468. You can visit our website at www.austincoins.com. From there, you can go to our YouTube page where we'll have this show featured later. I also like a lot of other videos out there put out by the SGT Report, by other hosts here on the Rents Radio Network. We cover a lot of Charlie McGrath's material from the X22 Report. There's just a ton of information there. We also would like for you to visit our Learning Center. There you'll find all of our informative articles that we've written over our 25-year history. We also have the Austin Report, which is our blog. You can link through to there from our main website. Just a ton of information. Request our latest report. We have our 2015 financial outlook for gold and silver, and that is delivered to you free of charge. All you have to do is fill out the form right there on the website. If you're looking for a company that's honest, that's going to give you honest pricing, but priceless information, I think we're your company. Again, www.austincoins.com. If any of you have any questions about tonight's show, feel free to give us a call. If you'd like to add to your holdings, and if you are forced to sell, that's something that we certainly wouldn't recommend. But if you're forced to sell, we're a happy buyer. And like I mentioned, we think that it's game on here. All of the indicators seem to be lining up, and it also lines up for something that I've been telling you for a long, long time, and that is the people who move markets, they know where the exit signs are, or they know where the warning signs are, and as soon as they see them, they know where the exits are. And it's not into negative interest rate Swiss bonds, it's into gold and silver, and that's the reason why you've been seeing this big surge in prices during a time when deflation is slapping us in the face. So tomorrow we're going to have a big announcement from the European Central Bank. The leak today was $50 billion a month in direct bond monetization. I happen to think that was probably a head fake and that they'll come out with an even bigger announcement tomorrow. They sort of wanted to see what was going to happen in the markets. A lot of people had already priced in a $1 trillion program, and the one they announced was only $600 billion. We'll see what happens there. It could be a big day for gold and silver. My advice is to accumulate steadily on any dips in pricing and get ready, because I think it's time to buckle your seatbelts. The last couple of years have been extremely tough for gold and silver investors and gold and silver dealers. And I think it's time for our vindication, and that soon we'll all be laughing and vindicated. And a lot of us have to have the worry of being right and whether or not we were wrong. And over the last couple of years, have been questioning and facing those questions from our peers and our family and our wives and others. But I think we're all going to be vindicated in a big way, and soon. As I mentioned, things are getting worse, and they're getting worse quicker. I believe that this is the final countdown, and all the indicators out there are flashing red lights, and gold is responding by going up and going up heavily. Gold's up 8% this year, silver's up 14%. Thank you guys so much for tuning in. It's always a pleasure. I hope to have a guest on in the next couple of weeks. Brandon Smith of altmarket.com and I have been in touch. In fact, he was going to come on tonight's show, but something came up. So hopefully I can get him on the show, as I enjoy his perspective. In fact, I find his articles fascinating. We write about a lot of the same subjects, but I find he covers it even better than I do in some cases, if not most cases. So I look forward to having him on soon, and hopefully we can bring you a ton of guests here over this year. I've got a lot of people listed, and a lot of people to contact, and a lot of people that I think will bring a ton of information to the show that you guys will enjoy and be able to take part in. Thanks as always. Look forward to hearing from you guys, and I look forward to doing the show again in a couple of weeks. Thanks for listening.
down into fractions. 10 years old is something to see. Another kid my age drugged under a Jeep, taken and bound and found later under a tree. I wonder if he had thought the next one could be me. Do you see the soldiers that are out today to brush the dust with bulletproof vests away? It's ironic at times like this you pray, but a bomb blew the mosque up yesterday. There's bombs on the buses, bikes, roads, inside your market, your shops, your clothes. My dad, he's got a lot of fear, I know, but enough pride inside not to let that show. My brother had a book he would hold with pride, a little red cover with a broken spine on the back. He hand wrote a quote inside: when the rich wage war, it's the poor who die. Meanwhile, the leader just talks away, stuttering and mumbling for nightly news to replay. The rest of the world watching at the end of the day, both scared and angry, like what did he say?
You have been chosen, yes, you, to discover for yourself what thousands have already experienced, the most life-changing health product in the world. It's called Royal Velvet, and there's nothing else like it. Royal Velvet users testify to receiving hundreds of benefits, from reversing the effects of aging to mental clarity, as well as noticeably improved sleep, energy, libido, overall health, and so much more, including saving lots of money. This is the real deal, that once-in-a-lifetime opportunity that you will regret if you don't act upon it. Honestly, there is an extremely limited amount of raw material, making it available only to a select few, a very select few. So find out why you have been chosen. Go to royalvelvetnow.com, click on the rinse icon in the upper right-hand corner for an incredible surprise. Oh yeah, if you place your order before we run out of them, you will receive the eye-popping but simple-to-read book that tells you how to live in divine health, and it's free. royalvelvetnow.com.
Are you prepared for the future? Do you know how to navigate past the upcoming dangers before it's too late and seize budding opportunities before others do? Forecasting worldwide since 1980, Gerald Celente, publisher of the Trends Journal, provides timely and accurate trend forecasts that have earned him the reputation as the most trusted name in trends. The proof is in the hundreds of accurate forecasts Celente has made over the past 30 years. The 1987 stock market crash, the clean food trend, the dot-com bust. The Trends Journal alerts subscribers to early, subtle signs of crucial trends that will shape our future. It allows readers to anticipate change, recognize the implications, and take proactive strategies. Put your money where your mind is with Gerald Celente's brilliant and indispensable Trends Journal. Go to trendsjournal.com or call 845-331-3500. That's 845-331-3500.
You're listening to the Rents Radio Network, nationwide and worldwide on the net and at rents.com.